Well, hey there, everyone. Welcome to this PPP and stimulus update. We've got a lot of news to cover, so let's just go ahead and dive in. If you are here live, let me know that you're here live. Say hi in the comments. Hey, Shonda, thanks for joining. And if you have questions, feel free to drop them in the comments. I will get to all of your questions. I'm sure there are probably a lot of them. So before I get started, I do have some slides because I know this is a lot of information. I do just want to mention that last night, President Trump tweeted and put into question the bill that we're going to talk about. So if you aren't up to date, hey, Amanda, if you're not up to date, hey, Danae, oh gosh, I'm probably screwing that up. I'm sorry. But thanks for being here. So basically on Monday, the House and the Senate passed an almost 6,000 page bill that was actually 12 bills rolled into one. And one portion of it was additional stimulus and financial support because of the COVID pandemic. The remainder of the bill, the majority of the bill actually, was related to the regular annual budget. So they kind of rolled everything together and put it into this one package. So the House and the Senate passed it, sent it up to the president to be signed. That was Monday. So last night, Tuesday night, the president tweeted calling into question whether or not he would sign the bill. Apparently, some of his issues with the bill, he thinks that the individual stimulus payments should be higher, and he's got some issues with some other pieces of it. Now, we don't know that this means he is going to veto the bill. He hasn't specifically said he's going to veto the bill, but it certainly makes some people very nervous that he's not just straight up saying that he will sign it. I will note that the White House has been involved in the negotiations, not directly, but they've been apprised of them, and their requests have been included in this bill. So it seems frustrating at a minimum that we would now get to this point and hear that the president perhaps might not move forward on this bill. I will also say that this bill passed the House and the Senate with what's called a veto-proof majority, meaning enough people voted for it that if the president does veto it, it could still pass. That said, what we've seen from the Republicans in the past is that they've tended to follow President Trump. So if he does veto it, do we lose that veto-proof majority? That's possible as well. So all that's to say that everything I'm about to tell you today has not been signed into law yet, is up in the air, and I'm sure over the next couple of days we're going to get a lot more information. They basically have until December 28th to get this bill signed and through, which is actually a decent amount of time in the world of politics. May not seem like it, but it is. So having, I think, what is that, 6 days, 5 days to get through is actually a good amount of time. So we'll see what happens. But I do want to go through the changes in this bill because there are a lot of them. Some are really good, others not as much. And I want to make sure y'all know what's coming down the road if this bill does get passed. So let me go ahead and share my screen. And again, if you have questions as we go through, drop them in the comments. And I will do my best to pay attention to the comments so that I can get you all the questions. Okay, we're going to do some things here first to make this. Hold on. We're going to put that buddy there. Okay, so let's go ahead. I think everybody can see my screen now. I'm going to pull this off just so y'all can see. And I'm going to come over here and dive in. Got a lot to cover today. So what's changed or what will change in this bill? I'm going to talk about 5 areas. A lot has changed in this bill beyond these 5 areas, but I'm really going to touch on the things that are relevant to y'all as business owners. Note that there are more changes in this that affect certain industries or may affect individual families, but not necessarily business owners. So we're going to touch on the stimulus payments, which are those, remember y'all got, if you qualified, you got $1,200 checks before. That's what we're going to talk about. Unemployment benefits, the PPP and the EIDL, both of which are loans from the SBA, tax treatment and just tax changes in general, and then just some other financial protections that aren't specifically business related, but are probably relevant to a lot of folks. Let's talk about the stimulus payments. So the stimulus payments that are called for in this bill, this is an additional stimulus payment over the one that was received before, would be $600 per adult and $600 per child under 17. If they're 17 or older, they don't qualify. So $600 per person, essentially. You get 100% of the stimulus payment if your adjusted gross income is up to $75,000 if you're a single taxpayer, $112,500 if you file head of household, or $150,000 if you file married filing joint. Now, your adjusted gross income is that line on your tax return, excuse me, which basically, if you pull up your 2019 tax return, that's the best way to figure this out, because they're going to base whether or not you get this payment on the 2019 tax return. So here's, and one thing to note before I move on. If you had adjusted gross income above these levels, your stimulus payment gets reduced $5 for every $100 your adjusted gross income is above these levels. So for single, it phases out, and I think it's at 87,000. I'm blanking on the math. I think it's 180 something thousand for married filing joint. So if you're above the 75,000 if you're a single taxpayer, or 150,000 if you're married filing joint, then your stimulus payment will be reduced $5 for every $100 you're above that number. And again, this is based on your 2019 taxable income. So if you filed a 2019 tax return, and at this point you certainly should have filed one if you were required to file one, then the Treasury is going to automatically send you a check provided you qualify. If you didn't file your 2019 tax return, or, this is the big or, if you filed 2019 and didn't qualify because of your 2019 income, meaning your 2019 income, your AGI was above these thresholds, but in 2020, you've had a reduction of income to where you would qualify if we were looking and basing this off of 2020 AGI, then when you file your 2020 tax return in April of 2021, you will actually be able to claim this credit essentially, and you'll actually get not just this stimulus payment, but the first one back. When was that? Back over the summer. So keep that in mind, that even if you don't qualify now because your 2019 income levels were too high, if your 2020 income levels have gone down because of loss of income, then you potentially may get some or all of the credit when you file your tax return in April of 2021. And it's a refundable tax credit, meaning that even if you don't owe taxes when you file that return in April, you will get money back. They will send you a check. So please make sure that you pay attention to that. If you're thinking, oh, this doesn't matter for me because I don't qualify, you may actually qualify based on 2020. Another big change in the stimulus payments, and I'm cheering this one, I'm very happy about this one. I wish it went a step further, but we're going to take what we can get, is that this round of stimulus payments, and actually the first as well, will not be denied to citizens who are married to someone without a Social Security number. So what was happening was, if you were married to, let's just say, an undocumented immigrant, you did not receive a stimulus payment back in the summer, even if you otherwise qualified for one. They're fixing that. They're basically saying, we're not going to deny you the stimulus as long as you are a citizen. Now, I think they should be sending them to everyone, citizen or otherwise, but that's a different conversation for a different day. You will not be denied, and this is retroactive. So for this round, you should get the payment. Assuming you qualify based on your 2019 income, you should automatically get the payment. For the prior round, if you were denied because of this, you can claim that credit on your 2020 return, like I just talked about, for folks whose income has changed. Cool? So that's stimulus payments. Let me know if you'll have any questions in the comments, but I'm going to move on because we got a lot we got to cover. Okay, unemployment benefits. This is the big one, especially for self-employed folks, because this was really the first year where self-employed folks could take advantage of unemployment under the Pandemic Unemployment Assistance, PUA. So the bill overall extends PUA. It extends the PUA program. And it basically extends it through March 14th of 2021. It otherwise was going to end this month. Couple of different things it's going to do. It's going to provide an additional $100 per week under PUA. So this is just for my PUA self-employed folks. If you earned at least $5,000 per year in self-employment income, but you were disqualified from receiving PUA because you were eligible otherwise for state benefits. So who does this affect? This affects you if let's say you're a freelancer, or you've got some self-employment income, but you also have a job as an employee. Maybe you weren't making enough from freelancing to pay your bills. So you also picked up a part-time job. Many of you found, frustratingly, that because of that part-time job, you didn't end up qualifying in full or in part for the PUA benefits. And instead you qualified for your state's regular unemployment benefits, which tended to be less than the PUA benefits. So this is specifically for you. And what they're going to do is they're essentially going to kick you an extra $100 a week through March 14th, 2021. Because you kind of fell into that loophole, okay? Now, they're also going to include an additional $300 a week for everyone on unemployment, PUA, regular, whatever it is. So as long as you're still on unemployment, you're going to get an additional $300 a week. This is what we saw, I think it was in August, for that period of about 3 weeks where Trump signed an order, we got an additional $300 per week. Similar to the $600 in the original CARES Act, $600 extra per week. That was quite a nice benefit for a lot of folks. Now, again, all of these changes are through March 14th of 2021. So they've extended the unemployment period. And so essentially you get more time on unemployment than you normally would because they've extended this. Cool. So good news for the most part in unemployment. Not as much as we would hope. Remember, we used to get $600 extra a week. Now it's only $300, but it's still something. Okay, let's move on to the PPP, the Payroll Protection Program. This is the big one. This is where I know this has confused a lot of folks. It's got a lot of intricacies, and we saw a lot of change. And we've actually been seeing a lot of changes in this over the year as Treasury and the IRS have clarified some things. So they've now clarified even more. So the good news is, whether or not you got a PPP loan before, they are going to do a second round. Now, the second round has some changes to who is eligible for this. So first, maximum loan amount of $2 million. This has come down. So the purpose of this second round, what they're saying is that they really want to make sure that small businesses get the PPP this time. There was a concern last time. You saw a lot of these big businesses, a lot of big airlines and celebrities and whatnot getting these loans. They have really focused this now to make sure that small businesses are going to get these loans. So maximum loan amount of $2 million. It's only for borrowers with less than 300 employees. So if you have more than 300 employees, you do not qualify. Now, here's the trick here. Here's the new addition. Well, those two are new additions too, but this is the big new addition. In order to get the second round of the PPP loan, you must have at least a 25% decrease in your gross sales, your gross receipts, in at least one quarter this year, compared to the same quarter in the prior year. So you could look at Q4 of 2020, October through December, and as long as whatever your gross receipts were this year were at least 25% less than what they were last year's Q4 2019, then you're good, you qualify. And you can do that for any quarter this year. It doesn't have to be Q4, but you've got to compare it to the same quarter last year. Now, they've also set aside $12 billion specifically for minority-owned businesses. Again, this was in response to major concerns that were raised that a lot of small business owners and minority-owned businesses were left out of the original PPP program. In other good news, nonprofits are now eligible. So if you run a nonprofit organization, this is now an option for you. One point I want to make where you're not eligible is if you received the shuttered venue grant. This came out this year in response to COVID for movie theaters or concert venues, places like that essentially just couldn't operate at all because of the COVID-19 pandemic and because of the requirements to shut everything down. So if you got that shuttered venue grant, you are not eligible for the PPP program. So keep that in mind. It's a doozy. Again, throw your questions in the comments. I'm going to keep going. We got more PPP changes. Okay, so what is the PPP loan? What does the second loan look like? What do you get? It's just the same as the first round where you're eligible for 2.5 months of payroll. And so you can base that number, however you calculate your 2.5 months, you can base on either the entire 2019, so the full calendar year, or you can base it on the last 12 months because not everybody was in business in 2019 or people hired, people didn't have employees at the beginning, but they did at the end, whatever. So you can choose if you want to base it on the calendar year 2019 or just the last 12 months, but you got to base it off of a 12-month period, and then you can get 2.5 times whatever the payroll is you paid for that period. Now they have expanded coverage, and I want to pull my notes up here. They have expanded coverage expenses under the PPP. So in 4 areas: operations, property damage, supplier costs, and worker protections. And I just want to touch on some things in each of these areas. So in operations, they've expanded coverage for to include payment for any software, cloud computing, and other human resources and accounting needs. So they've kind of expanded the pool there. In property damage, they've expanded eligible expenses to include costs related to property damage due to public disturbances that occurred during 2020 that are not covered by insurance. So I'm guessing that this was probably something thrown in response to a lot of the riots and protests that you saw. I'm gonna withhold my comments on what I think is probably behind this inclusion and my thoughts about them including this because of public disturbances. We're gonna put that aside. But if your business did incur damage because of a public disturbance that occurred this year and the damage was not covered by insurance, then that would now be an eligible expense that you could use PPP funds for. It also extends eligible expenses to include supplier costs. So payments to a supplier if you had a contract, a purchase order, or an order for goods that was in effect prior to taking out the PPP loan. And those costs are essential to your operations at the time at which you incurred the cost. Supplier costs of perishable goods can be made before or during the life of the loan. So basically, before they were saying you can't really use it to acquire stuff. Now they're saying, okay, you can, as long as those materials or goods were essential to your operations. And then the last category, and I think maybe the biggest category for folks, is that they expanded eligible expenses to include worker protections. So if you purchase personal protective equipment, PPE, or any other adaptive costs you made to comply with federal health and safety guidelines or any equivalent kind of local guidelines related to COVID-19, if you made those expenses between March 1st, 2020 and the end of the national emergency declaration, which hasn't happened yet, we're still in a national emergency. If you basically had to make any alterations, if you had to put up plexiglass, if you had to buy PPE, things like that, you can now use the PPP loans to cover those expenses. So so really kind of expanded what you can use the PPP funds for. Now, I do want to note that the benefit of the PPP loan is that you potentially can get 100% forgiveness of the loan. That's really what we're going for here, right? In order to do that, the rule still is, they haven't changed this, the rule still is that you have to spend at least 60% of your PPP funds on payroll in order to qualify for forgiveness. Remember, that came down, that was 75%, I believe, in the summer. That came down to 60%, that's still the rule. So while you can use your PPP funds for additional expenses now, you still need to make sure that you hit at least 60% being used for payroll in order to get the full forgiveness, because that's really the point of this whole program, was to keep people employed. Okay, a couple more changes to the PPP. I promise we're almost done. Let me know if y'all have questions on this. The covered period has changed a bit. So when the PPP first came out, you had to basically use the money within 8 weeks. Then they said, okay, we understand that that's maybe a bit challenging. We'll give you 24 weeks, but you had to choose. You had to choose an 8-week covered period or a 24-week covered period. You couldn't do anything in the middle. Well, now they've changed that. Now you can choose a covered period anywhere between 8 weeks and 24 weeks after you get the loan. So if you want to choose 12 weeks or 20 weeks, totally fine, you can choose. Another big change, this will make a lot of people happy, the EIDL Advanced Grant. So the EIDL was the other loan program out of the SBA. It's actually a loan program that always exists, was offering up to $10,000 in advance grants, meaning you could apply, you would get up to $10,000 in a grant ahead of your full EIDL loan being approved or denied. And you didn't have to pay the grant back. The EIDL itself does need to be paid back. Well, what they were doing before was anything you got in an EIDL advance grant up to $10,000, you would have to subtract from the amount of the PPP that would be forgiven. They got rid of that. So now your EIDL advance grant up to $10,000 does not have to be subtracted from your PPP forgiveness amount. So that's a big win. They also, and we don't have specific guidelines on this yet, we expect to have these assuming the bill passes in the next few weeks, but they are increasing the ability for current PPP borrowers. So if you've already taken out a PPP loan, to either reapply for the second round or to go back to your lender and request an increase if you're eligible for more money because the rules have changed. Again, we don't have guidelines on what that looks like. What I would recommend is, number one, keep an eye on this bill. Let's hope it passes. And then number two, I'd give it maybe a week or so, especially with the holidays, let them get guidelines out to the lenders. And then I'd call up your lender and I would say, how does this change for me? What does this change? Can I get more money? Okay. So that's the PPP. Again, drop questions in the comments if you've got any for me. Let's go to the EIDL. So not a lot changed here. Again, the EIDL is an emergency, oh gosh, I can't remember what it stands for. Emergency something disaster loan. I can't remember, EIDL. It's a loan from the Small Business Administration. Again, these are always available provided we're in a disaster. They've done a couple of things here. Number one, they've added additional funding that's targeted specifically to lower income communities. Again, this was a concern with the original CARES Act that a lot of lower income communities, a lot of small businesses got cut out of this funding. So they're putting more targeting in specifically for lower income communities. They are also extending the period for EIDL grants through December 31st, 2021. So if you didn't get one of those advanced grants up to $10,000, like I mentioned, you still have the opportunity to go and apply for one. You go to the SBA's website, sba.gov, follow the little boxes to get to the EIDL, and you can apply for it there. And just as a reminder, the way the EIDL works, or the way the grant works, is if you apply for the EIDL and also for the grant, you check a box that says, yes, I want the grant. And if you are approved for the grant and they give you the grant money, you can keep that even if you ultimately get rejected for the EIDL loan. So the grant is truly a grant. Now, the way it was working before, when they first announced this, was they said, these grants are great, you'll get them within 3 days. Realistically, that didn't happen for a lot of people. What they really meant was, once the SBA approves your grant application, you'll get the money within 3 days. As people were finding, it was taking weeks upon weeks, for some people months, before their application was ever getting approved. Well, this legislation actually extends the time for the SBA from 3 to 21 days. So it's giving them more time to approve. Now, we'll see how this all shakes out. A lot of people have already gotten these grants, so maybe this process gets easier and takes less time moving forward. But they are getting more days to actually process stuff. Also, and I mentioned this before, but I want to reiterate it here, you are no longer required to deduct your EIDL advance grant from your PPP loan forgiveness amount. So if you got the EIDL grant and you got the PPP loan forgiveness, this is going to be a big win for you. All right, we're going to stop there for a second. If you all have questions, put them in the comments. We're getting close. We're about halfway done. Y'all, there are a lot of changes in this bill, but these are really the big ones I wanted to highlight for you. And again, if you're just popping in here live, I just want to reiterate, this is not final signed legislation yet. It's still up in the air. We don't know what Trump's going to do about this. So we're going to play. I keep looking at my phone to see if I get any alerts. I haven't gotten any alerts since this morning, but I'm going to keep an eye on it as we're here live. Okay, so let's talk about tax changes. I know nobody wants to talk about taxes, but there are some tax changes that are important to touch on. Some things that we've already kind of touched on and others that are unrelated to the loans and all that. The first, and this is a huge change, is that the expenses that you pay for with your PPP loan funds are now tax deductible, even if you get forgiveness. So if you've been following this, when the PPP came out, there was this big question of, okay, I get these funds, I use them to pay business expenses. I would normally deduct for tax purposes those business expenses. Can I do that given that I'm going to get my PPP loan forgiven? The IRS basically came out and said, no, that would be double dipping. If the government gives you free money, which is what the PPP loan is, if you get it forgiven, if the government gives you free money, that you use to pay for stuff, you don't get to then get a tax deduction for that, because that would be double dipping. And that's what the IRS has been saying all year. For what it's worth, I agree with them. That makes sense. I think the letter of the law, they're absolutely right. But Congress has decided to basically allow the double dipping, which is totally their right, and I'm glad they are. So they're allowing the double dipping, and they're basically saying, look, even if your PPP loans are forgiven, you can still deduct for tax purposes your business expenses that you paid for with those PPP funds. So if you do have a PPP loan, if your accountant was advising you, or you were thinking about this yourself, you may have in your accounting system been categorizing your PPP expenses specifically as that, so that you would know come tax time you'd have to pull those out. You couldn't deduct them. Well, the good news is now you can deduct them. So just know that. Make sure when you go work with your accountant to do your taxes next year, that you make sure that those expenses are now included because they are now tax deductible. That's a big change. It's a big change. It's going to help. Big change that's going to help a lot of people. The next thing is they also extended the deadline for employers and employees to pay back deferred payroll taxes. They extended this deadline to December 31st of 2021. So this was actually a memorandum, an executive order by the president, again, I think it was in August, that basically said employers and employees can defer their payroll taxes from September 1st through December 31st of this year. You still have to pay them back. So it wasn't free money. It was basically just an extension of time to pay those taxes. Now, not a lot of people took him up on this, probably because you still were gonna have to pay them in the end. So it wasn't really gonna help you out that much. But if you were one of the people who did take advantage of this, note that you now, before the rule said you had to pay them back within 3 months by March of 2021, now you've got through December of 2021. Okay, the next thing, the employee retention tax credit. So this tax credit, part of the CARES Act, basically provided a benefit, a tax credit. I believe it was 50% up to $10,000 per wages per employee for the year. It was for the year. And essentially, it was meant to encourage employers to keep their employees employed, even if they didn't have work for them, even if their businesses were effectively shut down. So they've done a few things. Number one, they've extended the credit through June 30th of 2021, previously expiring this year. Number two, they've increased the credit amount from 50% of the wages to 70%. So that's great. They've also increased the eligible wages. So before it was $10,000 in wages per employee per year. Now it's $10,000 per employee per quarter. So you can actually now get qualified wages up to $40,000 for the year versus $10,000. And there's a gross receipts test. So basically you had to, your gross receipts had to have declined before at least 50%. Now that decline is only 20%. So they've made it easier to qualify and they're giving you more. So this is a great credit if you've got employees. Even if you're not, your business isn't really running, but you're still paying your employees, this is a great incentive to keep them employed. I know a few people who have talked about this saying, I don't really want to lay off my people. I want to keep them on. I want to make sure that they can still be paid, and I want them on when business picks back up. Well, this could be a great opportunity for you. They have also, or the bill also extends paid sick and family leave credit through March 31st, 2021. So for businesses that qualify, this was part of the CARES Act, and it provided a dollar for dollar credit, meaning you spend $1, you get $1 credit if you provide, because you were required to provide paid sick and family leave for certain people because of COVID. So it extends this. Again, originally ending this year, it extends it through March 31st, 2021. So if you're still paying paid sick and family leave, you can still get this credit. Okay, a couple more tax changes. We're almost there. Stick with me. Okay, they are also extending the special charitable contribution through 2021. So again, this was part of the CARES Act. The way that this works, so let's take a step back for a second. When the 2018 tax law changes came into effect, one of the biggest changes for most people was that they increased the amount of the standard deduction. So I think the standard deduction used to be around 12 or 13 grand for married couples. They've now increased it to 24,000 and change. And essentially what happened as a result of that is more people started taking the standard deduction instead of itemizing. Itemizing means you list out all of your deductions that count. And if it's more than the standard deduction, you're going to itemize because that's a better option for you, right? Well, one of the downsides to this was, I think my doorbell is about to ring, so it's about to get loud in here. One of the downsides to this was that the charitable contribution or charitable deductions was part of itemizing deductions. So now that the standard deduction is higher, a lot of people who in the past would have gotten a tax deduction for donating to charity weren't now because they were doing the standard deduction. So Fast forward now to 2020, and charities are really struggling, right? There's a lot of need this year. So in the CARES Act, Congress basically said, we're going to have a special charitable contribution deduction of up to $300 if you're single, of up to $300 for everybody. For charitable contributions you make in 2020, even if you take the standard deduction. So you'd get that, right? What they have now done in this bill, they've extended that deduction through 2021, so contributions you make through 2021, and they've actually increased the amount. So it's $300 if you're single, that stays the same, but it's actually $600 if you're married filing joint. So they've now allowed it to count per person, whereas before it was per tax return. Two more changes. They've also restored the 100% business meals deduction for 2 years. A couple years ago, 2018 tax law changes, there used to be a 50% tax deduction for business meals. They got rid of that as part of the 2018 tax law changes. They have brought it back and doubled it. So now if you go out to eat for business purposes, you get a 100% deduction on food and drinks. They've extended that for 2 years. So it starts January 1st, 2021 and goes through the end of 2022. I will tell you candidly, not to wade too much into the politics, but I will tell you candidly, this is a bit of bullshit. They've said that they've done this to support the restaurant industry. Not a lot of people right now are going out for business meals, okay? And a lot of the businesses that are struggling anyway are not the ones that are likely to be where you're going to have a lot of those business meals. So this is a bit of a bullshit deduction that I think they've added in. I think they've done it to appease their lobbyists and their big business friends. It's great if it helps you out, I'm glad, but I think this is going to help very few people. So don't fall into the trap of believing them when they say we did this to support the restaurant industry, because candidly, I don't think it's going to do that. All right, last tax law change in this bill that we're going to talk about today is that they've clarified, this is what we thought all along, but they've clarified that the PPP loan forgiveness, so when your PPP loan is forgiven, and those EIDL advance grants, remember up to $10,000 that you get, you don't have to pay back, they have clarified that those are not taxable, meaning you do not have to include them in income. So if you got a grant or if you had your PPP loan forgiven, you do not have to pay tax on that. It is not income. That's a really good thing. We kind of already knew that was the case, but they've confirmed it now. They're clarifying it. They're making it really clear so that there's no question. So that's good. All right, that was a lot of tax law changes. Again, let me know if y'all have comments or questions. You can have comments, but I'm assuming questions. Let me know if y'all have questions. Hold on, I gotta move this around. Bring this up here. So let me know if y'all have questions. And we have our last slide. We're nearing the end. We're nearing the end. Okay, I threw these in. None of these are specific to businesses, but I threw these in because I think these are likely to help a lot of small business owners. So 3 areas where Congress is providing additional financial protections. Now, not all of these kick in right away. And Michelle asks, is PUA included in income? So PUA is that pandemic unemployment assistance, basically unemployment benefits. Michelle, it absolutely is. And it's a great question. I'm really glad you asked it. Candidly, I think this is one of those things that our government does a really bad job of making super clear to people, because I've talked to a lot of folks this year who are really surprised to learn that they're going to have to pay tax on their unemployment. And here's the thing. And by the way, it's PUA or regular unemployment. No matter what kind of unemployment you're on, it's absolutely taxable. Here's the thing. In most states, they do not take out taxes from your unemployment benefits. So unlike when you're an employee and you get a paycheck and your taxes are automatically taken out, in most states, especially PUA, they are not taking out taxes. Now, a lot of states offer the option to check a box and have your taxes withheld, but you have to actively do that. So if you didn't actively do that, they're not withholding taxes for you. And when you go to file in April, you're going to have to pay tax on all of those unemployment benefits you receive. So what I always tell people on unemployment is, if you don't want to have to do that, call your state right now, see if you can choose the option where they withhold those taxes for you. And if not, do a quick calculation now, try to figure out what you're going to owe and try to start setting that money aside if you can. Amanda says, my service is terrible where I am. I'm hoping I can watch a replay. Yeah, absolutely. The replay will be available. We never take these down. You can always watch this. Awesome. Okay, great. So let's dive into these financial protections. So the first one is actually medical debt. And this is one that actually doesn't come into play until 2022. So this doesn't help you right now, but this is a big one moving forward. Essentially what this does is it prevents hospitals from charging you for expenses that you have no control over if your insurance doesn't otherwise cover them. So an example would be, if you go to the hospital, something happened, you go to the hospital, and they end up having to transport you somewhere. They have to transport you to a special heart center or a special whatever, and it's an emergency transport, and you're not able to consent. You're under sedation or whatever it may be. Basically, this law says the hospital, if your insurance doesn't cover it, the hospital can't charge you these exorbitant amounts for these expenses. Another example would be, what was another example? Oh, if you end up needing a specialist and they have to bring in a specialist to treat you and that specialist is out of network, even though your doctor, your emergency room, whatever that you went to is in network, that's not an expense that they can charge you for if your insurance doesn't cover it. So it's basically trying to help people from getting into further medical debt. This is what happens to a lot of folks when they go and they end up getting saddled with these massive costs for treatments or doctors that were out of network or not part of their plan that they never had the ability to consent to. So that's, again, it doesn't come into play until 2022. We're going to see more guidance on it, I'm sure, but that's good news. That's coming down the pike. A couple of things that are going to help you now. If you are a renter, they have extended a moratorium on evictions through January 31st of 2021. Now, you still have to pay the rent, unfortunately. You still got to pay the back rent. They haven't provided any, shouldn't say they haven't provided any help with that. They did put aside some funds to provide renter assistance. So there is some renter assistance out there, but you still have to pay, but you at least now get a moratorium on being evicted through January 31st of 2021. If you have a mortgage, if you have an FHA mortgage, they have put and this is actually not part of the legislation, so this is already a done deal. The Department of Housing and Urban Development announced this on Monday, so this is already done. But if you have an FHA mortgage, they have put a moratorium on evictions and foreclosures. They've extended it through February 28th of 2021. It was previously expiring December 31st, so they've extended that. So if you rent or you've got a mortgage, you may have some assistance coming your way, or at least an extension for when you have to pay. All right, friends, that's all I got for you. I know that was a lot. Feel free to go back, watch the replay, drop questions. I will keep monitoring this. I will, swing back and answer questions if you drop them here, or if you're watching it on the replay, I'll come back and answer your questions. And I'm going to keep my eye on what's happening. Still no alerts, but I'm going to keep my eye on what's happening. So as soon as I know something, I will provide an update here. And if we have to, we'll come back next week and we'll do another update if things change. So hey, Tammy, you're so welcome. So thanks everybody for being here live. Again, drop your questions if you have them. If you celebrate the holidays, have a very happy holiday. And otherwise, I'm actually going to be live here this afternoon to do some last minute financial to-dos before the new year. But if I don't see you there, I will see you all next week for another Tip Tuesday. Bye for now.